All right, welcome everybody to today's webinar. It is actually about 5 minutes before we officially begin. All right, so I like to pop in just a few minutes early. If you've been to webinars where I've taught before, you know I like to do that. So we are a few minutes before we actually start. So first off, thank you very much for being here early. I like it that you show up early, kind of get yourself ready. So if you hear me and you see a bluish, well, very blue screen, I guess, that says how to generate income using credit spreads in the chat box, please just go ahead and give me a yes or a sounds good, like I'm seeing over there from John and William. So it looks like my voice and video is coming through, but I see Michael, Randy, Jills, John, James, Rich, Yvonne, Christoph, welcome. Lewis, Michael, Steven, Stan. Wow, they're going through kind of quick here. Joe, Barbara, Vittorio, Darius, welcome to all of you to today's session. We will officially begin in about 4 minutes. So thanks for being here early. In fact, since we are in this pre-webinar time, let me tell you how to chat with me in case it's one of your first webinars. Let me move forward a slide or two. So, by the way, there's our typical disclaimer in case you wanted to see what's going on there. So there's our, the legal stuff. So there's the disclaimer, and let's move forward one more, and there we go. So you should now see a GoToWebinar panel. So this is how you interact with me, because I do want to make it really interactive. So now's a good time to find that on your screen. So you should, let me get my little laser pointer. So usually with GoToWebinar, or now if you're listening, some of you might be listening on YouTube or YouTube Live. Just with GoToWebinar, there's a chat panel. If you're listening on YouTube, it looks a little different. But in GoToWebinar, there's a little orange button. Look for it in the upper corner. This is if you're using the desktop version. So just find that, and then it'll bring up this little panel that looks like this, and it'll have a little spot where you can enter a question for staff. I am here with my buddy Todd Schaefer. He's my co-coach here at VectorVest. So use that throughout today's session. It is a live session, so you can interact with the two of us throughout today's session. I'll be asking you questions during the session as well. So that's where you would type it, then hit send, and we'll be able to see it. And Todd will be writing back to you and saying hi, and I'm sure he's probably busy right now saying hi and welcome to as many people as he can in the chat box. So great to have you all here. We'll officially begin in a couple of minutes. Let me tell you how to get the most out of today's session, because we've got a lot of great things to be covering today. I call them the 3 gets. Again, if you've been on a webinar that I've done before, you are used to this, right? So I want to make sure that you get as much out of today's session as possible, because we have a lot of great information to go over. I'm going to be going at a pretty good pace, right? Because we have a lot of information. It's important information. I'm going to give you rules and things to look at and interacting with you. So number 1, get something to take notes. Pen, paper. I put the drink in there. That way you're comfortable. That way you don't have to get up in the middle of the session because you're thirsty. So you have about 2 minutes right now. Get those things so that way you can take a lot of notes as we go. Number 2 is to get rid of distractions. So if you have a cell phone, that's kind of the biggest distraction for a lot of people. The best case scenario is to just turn it off, right? Just turn it off. You can silence it, flip it over so you don't see it. Just dedicate 1 hour of your life to focusing, right? That's where we're going to get ready to learn. So getting rid of distractions. Don't multitask. If you're on a computer, try, if you have other programs, just close them. Like, don't do email, because I guarantee you will miss something. Okay, I guarantee you're going to miss something, and it's not really possible to go back, because we got to keep going. All right, so those are the 3 gets to get out of to get the most out of today's session. We're in for a great session. I could feel it. I love teaching about generating income using credit spreads. So I'm glad you're here. We got about 60 seconds before we officially kick off. Let me actually move slides to our main title slide, so that way we are ready to go. Those of you who are just joining us, just know that we are officially going to begin in about 10 seconds. So welcome to all of you. And give me just 1 second. Let me make sure that everything is all set on my end. There we go. Welcome. Let's officially begin. It is time to begin our webinar. Welcome to our session today. It is titled, How to Generate Income Using Credit Spreads. If you were here before we officially began, you know my name is Brian D'Amico. I am very excited to be here today because credit spreads are one of my favorite trades. Ever since I learned them years ago, they've always been so interesting, and they've become one of my favorite things to do. And it's not just, fun financially. It's engaging. It's an engaging type of trade to do. And it's great to be able to talk to you and teach you about these trades today. All right. So I'm going to be giving you everything I can over the next hour. All right. We have got about an hour in today's session. I'm going to give you everything I possibly can, all my energy and all my info that I can. Everything I show you today is based on real results, okay? Not only that we've gotten, but from years of working with clients, all right, who are getting tremendous results. So what I'm going to show you today is not just theory. It's not just saying, hey, we think this could work. It's based on a back test. It should work going forward. No, these are real results. It's been tested, not only tested in the past, but we've been doing it, right? So it works, right? And then at the end of today's session, we got about 60 minutes together today. I'm going to show you, if you do want to go into a deeper dive and get more of a step-by-step tutorial on how to take this even further, I'll show you where you can go to get more help. And if you want faster results, kind of point you in that direction. But I guarantee, and you can let me know this at the end of today's session, I guarantee this is going to be packed with information on how to be using credit spreads to generate income. All right? So if you are ready to go, if you're good and you're ready, give me one more yes in the chat box. That way I know that you are ready and ready to go. Man, this is cool. You guys are fast. Stan, Dwight, William, Jeff, Doug, just to name a few who have typed it in. All right. So, like I said before, I love credit spreads because they're a great way to generate income. All right. So, let me just get my mouse back out here. Where'd my mouse? My mouse disappeared on me. There we go. Because I'm guessing you probably have things like recurring bills, right? The things that come in every month. You might have a mortgage. You might have a cell phone bill. Those are examples of recurring bills. You might have a car payment. Those of you who like to splurge a little bit, you might have a bigger car payment, right? Depending on which type of vehicle you've got, right? Or maybe you just don't have enough income, right? You might be worried that when you retire, you won't have enough income. Maybe you're in that position right now, right? You're in the right place, right? Because this was forwarded to me one time. I watched this article or this news story where there's so many people out there who have to still have to work, right? Because they don't have enough income. Maybe they didn't plan ahead. What you're going to see today is going to show you how you could supplement things like Social Security, or if you have a pension or things like that, with some extra income. So let me get a feel for you in this room. I'm going to put up a poll from GoToWebinar. Now, those of you who are listening on YouTube, just type your answer into the chat. But let me put this up on the screen. Give me just 1 second. All right, you should see a poll up on the screen that says, how would you rate your experience level with options? I want to get a feel for who's in the room. So there's a few choices there. Now, there's one choice that says no experience. And that's okay. Don't worry if you've got no experience. No experience. You haven't traded any just yet. Maybe you're a beginner. Maybe you've just done a call or a put. If you're intermediate, maybe you've done covered calls or even done some spreads like we're going to talk about today. Now, if you're advanced, you've done like all different types of things. And I see some people are typing into the chat box. While you're typing into the chat box, also click on the thing on your screen for the poll so you can get an idea. All right, we've got about 70% of the room has voted. So let me actually show this poll to everybody. That way you can see who's here with you. So let's see, we've got 28% no experience, and that's fine. That's fine. You're in a good spot. I'm going to try and teach this in a way that everybody can understand, even if you've had no experience. So you're in a good spot. And the 27% who are beginners, you're in a good spot as well. 38%, if you've done the spreads and covered calls, maybe you've just done covered calls, you haven't done spreads yet. So this will add another tool to your arsenal. And then 7% advanced, maybe this will just kind of refresh you on some of the trades that are available. Either you've done them before, you haven't, or you haven't been successful, or you have. I'm hoping that you as well will learn something today. So it's a great mix of people in today's session. All right, so let me close that poll. There we go. So for those of you who are beginners, I do want to talk specifically to you and to the people who have no experience. I do want you to write something down. And I want you to write 4 words down on a piece of paper, and this really helped me when I was learning options. Write down these words. I can do this. And I'm serious. Actually, write it down. I can do this, right? I can do this. Because it is something that you can do and you should do. All right, don't get scared, but I'm going to break it down so that you can understand it today, because this is going to be a trade that you definitely should learn because it'll allow you to generate steady source of income. Okay? You know, there's that elephant in the room where we got options here. A lot of people who are beginners think, oh man, options, aren't they risky? Right? Aren't they complicated? Aren't only professionals doing these things, or only professionals should be doing them? And my answers, of course, and that's why I'm teaching this webinar today, are no, no, and no to all 3 of those. You're going to see in today's webinar, all right, you're going to see that the trade that I'm going to show you today involves less risk than actually just buying a stock. It'll have less risk to control the same number of shares, less margin, right, which means small and large size accounts can do this. Small size accounts, you could do this with $3,000-$5,000. We just spoke to somebody the other day, a couple months ago, who did these techniques and brought his account from $5,000 to $8,000 in 4 months. So small accounts can do them, and even up to like $100,000, $200,000 accounts can do these trades. And what I'm going to show you, 70 to 90% of these trades are winning trades. Okay? Now keep in mind, it's about hitting singles. Those of you who follow baseball, if you're overseas, but this is about, I'm going to use a baseball analogy. It's like hitting singles. We're going to get single after single after single. We're not going to be swinging for the fences for home runs here. Over time, these singles are going to add up. We're going to be getting a lot of winning trades with this. And we're going to manage any trade that goes against us so that it is a minimal loss. Okay? So the trade that you learned today, I'm going to show you a trade that works during bull markets. So we're going to look at that today. I'm going to show you that it can also work in bearish market situations. So I'll walk you through those as well. Okay. And even if you get direction wrong, these trades can also work when the market's going sideways. All right. And you'll see that today. So again, always remember what I said. I can do this. Hopefully you wrote that down. All right. So here are today's objectives. All right, we've got a few objectives for today. And this is like the agenda of today's webinar. So first off, I'm going to help you understand the trade. Right? So even if you've never traded options, you're going to be okay here. But what I'm going to do is I'll draw it out first, and then we're going to walk through it one step at a time. Then we will walk through an example, like specific examples of trades using charts, and we'll just kind of lay it all out. And that way, if it is an abstract concept, it's going to start to make it more concrete for you. We'll look at case studies of trades that we've done and our clients have done in the past. That way, it'll help you understand what goes into these trades. And at the end, I'll provide a checklist on the screen that, of course, you can write down and follow along. They'll give you a checklist with action items. So that way, you basically say, all right, I should do this first, this second, this third. So that'll be at the end of today's session. Sound good? All right, so I do like to teach in a way that I always refer to as adding layers to a knowledge sandwich, which means I'm going to give you a little bit at first, like one layer. Then once you got that, I'm going to add another layer, and then add another layer, and so on and so forth down the line. And then when we're done, we'll have a complete sandwich of knowledge. So the first trade that I want you to kind of understand here is just like a standard or a typical trade. Right? A standard trade is one where you only make money if you're right. Okay? Now these are like a standard trade, those are ones you do all the time, right? I'm sure if you're on today's webinar, you've bought a stock, right? You've bought shares of a stock. That's a standard trade, and you know that you only make money if you're right. What we're going to look at today is what's called an income trade. And that's where you can make money whether you are right or you are wrong on direction. So you might be thinking, all right, well, how is that possible? How can I make money if I'm right or wrong? All right, so like I said, I'm going to draw it out first. And now those of you with a lot of experience, you just got to bear with me here. But hopefully this helps those of you who are new to this understand what we're going for here with these trades. So let me get my pen and get a color that everybody can see. All right, how about this color? Let's see if this shows up pretty well. So what we're looking at here is just a standard trade. So a standard trade is just one where you ideally find a stock that's going up, right? The way that we teach it here at VectorVest is you look smooth and steady, bottom left to upper right, basically a good stock. And a standard trade is you're like, oh, good, the market's going up, I'm going to buy the stock here. And after you buy it, the only way you make money is if that stock goes up, right? That's the way you make money. If it goes sideways, I mean, you're not losing money, but your money's tied up. And if the stock goes down, obviously, that's not good. So it's only good in one of three scenarios. Well, what about an income trade? An income trade is let's just say you're still going to find the same types of stocks. And a lot of people think that, option trades, you need to be a totally different stock finder person. No, you're still going to be finding the similar types of stocks. Let's just say smooth and steady, bottom left to upper right for your bullish trades. All right. But instead of buying it, what we're going to do is we're going to, based on probability, and we'll talk more about this later, but based on probability, you're going to say, all right, this is a price I don't think this stock is going to drop to. And not that you think, it's going to be based all on probability, and we're basing it on, at least, let's just say, I'm going to put this line down here. It would have just a 40%, 30% or less probability of getting down to this line. I'll say that up front right now. We'll talk more about it later. But let me just kind of give you big picture here, like just conceptual. In this type of a trade, all right, this down here is where we're going to be selling a spread. And we, of course, will add more to it as the webinar goes on. But just for now, understand that you're selling an option down here. Remember, this is just layer one of your knowledge sandwich. So you are getting paid up front for selling this option. And as long as the stock stays above this price or this option that you sold, that's going to be good for you. That's how you're going to be making money. All right. So if the stock goes up, that's the ideal scenario because you make the money, you make your profit objective the fastest if it does that. If it goes sideways, all right, you can still make money. Right? I put a longer line because you might have to be in that trade a little bit longer, not super long. And if it goes down, you could still make money as long as it stays above that line. Now, of course, if it goes below that line, I'll, again, talk more about this later. We actually close the trade if it hits that line. But that's where you would start to incur losses, right? If it goes down, and especially if it goes down below that line. So at least in 2 of the 3 scenarios, those are definite ways that we're going to be winning. And this one is like a, maybe, maybe not. Okay, so at least 2 out of the 3. So we went from 1 out of 3 to 2 out of 3 and possibly more. So that is layer 1 of our knowledge sandwich. Okay, the difference between a standard versus an income trade. So now let's get more detail about the specific type of trade that we're looking at today, which is a credit spread. That's the type of trade we're talking about. By the way, your broker might have it listed as a vertical spread, right? It's a vertical spread, but specifically it's going to be a credit spread because we are selling up front to open the trade. So there are 2 types of credit spreads. Okay, so one of them is a bull put credit spread. Or it might just be called a bull put or a bull put spread. The other one is a bear call credit spread or just a bear call or bear call spread. Okay? We are actually going to look at both today. So let's start with the first one, bull put. Okay? Let's break it down by looking at each word. We're going to break it down by looking at each word. Bull, put, credit, and spread. Okay, bull, put, credit, and spread. Those are the 4 words that make it up, and they really, if you do that, it'll help you understand it. Because I don't know if you're like me, but when the first time someone showed me the term bull, put, credit, spread, I was like, forget about it. Right? I was like, I will learn that later. It just sounded complex. I was like, forget it. I will learn that later. But somebody sat me down, and they're like, just think about it like this. Break it down by the 4 words. Bull. Well, the word bull means it is a bullish trade, which means you should only be placing this trade when the market and the stock are in an uptrend. All right, so a bull put credit spread, you're a bullish. Put means you're going to be using puts. Now, this is a spread, so you're going to be using two options. Both of them are puts. We're going to be selling one and buying one. We'll talk more about that in a little bit. Credit. Well, that just means you're getting paid up front. Instead of you paying out of pocket to initiate the trade, you're selling to open the trade, which means you're getting paid up front. And then spread is just the difference between the two strike prices. That's how we're going to be controlling risk on this type of a trade. Okay? So again, let's just go back to our example from before. Remember our income example from before? So again, we have a good stock that's going up. Forgive my squiggly line, but that's an example of a stock going up. We're going to pick a price based on probability. Let's just say down here, which again is a price that we don't think it's going to drop to. Remember, this is a spread and it uses puts. So there's going to be two puts. Well, this is going to be the one that we sell. So I'm going to put an S here. And then, actually, let me first say this. When you sell an option, or when you sell anything, actually, you get paid, right? When you sell something, you get paid. So let me just say the one that we sell is going to generate, let's just call it $2 signs worth of income. But you might be thinking, oh man, but selling a put all by itself, isn't that a lot of risk? Well, yeah, if you just did that's called selling a naked put. And we're not just selling naked puts here. What we're going to do is we're going to make this a low risk trade. We're going to reduce the risk dramatically because we're just going to come down a little bit below that one. And we're going to pick a strike down here. And this is going to be the put that we buy. So this stands for sell. This stands for buy. Now, since it is below it, it's not going to cost as much. Okay, but it does cost something. So you're going to use a little bit of this money. So let's just call this $1 sign worth to buy your insurance. That's your insurance put. Let's just say these two cancel out. That might be a visual way to think about this type of a trade, leaving you with a net credit on this trade. So you're still getting paid to do this lower risk trade. Now, those of you who are concerned about the back end stuff, don't be. Both of those trades are done as one trade with your broker. So you set up the trade with your broker. It's basically just as pretty much as easy as just buying a stock. Just a couple of clicks. You set up the trade and then you send it to the broker and they handle all the back end stuff of selling one put, buying one put, doing it all. And then it's basically just one trade for you. All right. Now, those of you who do like to look at it more of like visually this is called a profit and loss graph or a risk graph. This is just another way to look at it, just trying to hit different types of learners out there. So here's the trade looking at it another way. This is if you just sold the put, right? So if you're bullish on a stock, you can just sell a naked put, which is, this is a fine way to generate income if you have a little bit larger of an account. But when you just sell a put, okay, then look at all the downside that you have. Because when you sell a put, all right, there is a downside, right? You have all that downside risk. And if the stock drops, right, and the option gets exercised, you have obligations to buy the stock up at the higher, at your strike price. So, of course, if it drops quite a bit, you have a pretty big loss potential there. That's why you and I here in this webinar, we're not going to be just selling naked puts. We're going to try and eliminate this big red line down here. Well, how do we do that? Well, we buy insurance. And this is why we like this type of a trade. It caps the bottom side of loss. All right, it caps this. And in fact, see this cap up here? A lot of people who do these trades love this. Right? Some people say, oh, I want something that has unlimited profit potential. Well, guess what? Then greed kicks in and you never know when to close a trade. And some people hold trades and then watch them a winning trade go to a loser. This really helps to eliminate that. All right, because you have a predefined profit max. And what we do on these trades is just say, all right, if we get halfway there, we're going to close it. It totally eliminates the greed factor. So we'll talk more about that as we go. All right. So you put those two things together. That's what it turns into your bull put credit spread. Okay. Combine both those trades together. You end up with a bull put credit spread. So now, are you ready for another layer? That's at least two or three layers of our sandwich. Okay. So what we're going to do, we're going to add another layer, and we're going to look at just a real example with a stock. So this is an example of Costco. All right. I know it doesn't matter that it's in the past. All trades would actually be in the past. I don't have any like currently that are in progress, right? I can show you an end result. So here's one. It's on Costco. It's a nice looking chart, right? This is what we're going for. Remember before I said if you're bullish, you want to look for stocks that are going up, smooth and steady. Costco's an example of that at this time. And at the time, the market was also going up. Those are the two things that you want. So at the time, Costco was trading at 207.98. So remember the standard trade versus the income trade? Well, if you were doing standard trades, and you went out there and said, all right, I'm bullish on Costco, I'm going to buy 100 shares of it, well, it's going to tie up $20,798. Right? And the only way you make money would be if Costco goes up. The other downside is you got over $20,000 of your capital tied up. Okay? And it also means you got $20,000 at risk. Whether you like it or not, you got $20,000 tied up and at risk. All right. So one type of trade, as I mentioned, is just an income trade where you just sell a put. If you just sold a put, and let's just say you sold a put down here. This is a trade that even if those of you who know Dr. DeLito, he is the founder of VectorVest, which is the company I work for. He does like selling naked puts on good stocks that he wouldn't mind owning, but that's different. That's a different strategy. But when you sell a put, so let's say you pick a price down here at 205 and you sell that put. By selling that put in this example, you receive payment for that. You receive, in this example, $246 per contract. Well, that also means you still have over $20,000 of your capital tied up, because by selling a put, remember, selling a put means you're taking on obligations to buy the stock at that price. So the broker is going to say, all right, well, if you're taking on obligations to buy the stock at 205, you should have $20,000 of margin available. So it's tying up $20,000 of margin. All right. But I do want to say really quickly that the trade I'm showing you today, this credit spread, you're never going to hold them till expiration, ever. All right. So get that out of your head. That's typically when options get exercised. So you will never hold them till expiration, which means you should never, ever have to be just selling this put by itself. We're not just going to sell that naked put. What we're going to do is we're going to do a bull put spread, right? Because we like income trades with low risk that can still give us a way to generate steady income, right? So what we're going to do is we're going to buy a put a little bit below it. In this example, let's just say we're going to buy the $200 strike. That's our insurance policy. And again, just like any insurance policy, whether it be for your car or whatever, it does cost money. So in this example, that put costs $121 per contract. But again, that's okay, because this put you received $246. So you used $121 of it to pay for this one. Okay? And again, all this is done at the same time. You don't have to worry about all this back-end stuff. The broker will take care of that. But by selling this spread, you have now just generated $125 per contract. And your maximum risk is only $375 in this trade. Not $20,000, only $375. And some people say, well, how is it $375? Well, you just generated $125, and you see there's a $5 spread here. So the most risk that you have on this trade is $5 per share. Okay? $5 per share minus, let's just call that 5. You have 100 shares that you're controlling. And this might be going into a little bit too much, but understand that $5 max loss on 100 shares is $500, but you received 125. That's why your max risk is only $375. Very tempting, right? You know, $125 profit potential, $375 max loss. A lot better than $20,000, right? Now, some people might say $125 is not a lot of money, and that's fine. That's one contract. What we would say is, all right, if your account is big enough, we would size it a little bit bigger, and you could do more contracts. Let's just use it as an example. If you did 10 contracts, you've now generated $1,250. Even in that scenario, your maximum risk is only $3,750. That's it. Still not $20,000. Still not $20,000. And remember, we're targeting on this one half of that. So we're looking for a $625 profit on this trade. Okay? All right, so let's use this as a case study, because it's a real type of a trade here, right? So Costco, when we initiated the trade, it would have been back here. It initially went up for a couple days, and then boom, 6 straight days it came down. And then it went up for 3 days. So if you invested in this stock and you just bought shares of it, guess what? Costco only went up 1.4%. So again, if you invested, $20,000? How much is that? What is that, $200? You would have made $200, right? Did I do my math right? Help me out here, right? $200 of your $20,000. Well, by doing the same, the bull put spread, you made 16% on your investment. So in the example I showed, you would have made your $600. You would have made your $600 in that 2.5 weeks. In fact, I put this here because we have a private Facebook group for our clients who are in our ultimate retirement coaching group. Frank took this trade because we show these trades basically every Monday to our clients. Frank took this trade and he says he closed out of his bull put spread, that's what BPS stands for, on Costco, for a net of $955. So he probably did more contracts. I don't know how many specifically. You can do probably 15. It would be my guess or so. But that's a nice paycheck, right? $955 in 2.5 weeks. And then, he could have had another trade on at that time or done another one right after that. Right? It's just all about generating that income. So when you're doing things like this, I'll ask you a question. Hopefully, type into the chat box. We're going to do a little bit of interaction before we get to the bear call spread. So using that type of thing, if you could make money even when you're wrong on direction, let's just say that stock went nowhere. It basically went up 1%. But if you had a system where you're making money even when you're not right on the direction, how would that make you feel? Like you're placing trades and you're like, oh, well, the stock didn't even go for me. It just did nothing. Oh, I still made money? How would you start to feel? Craig's like, I'd feel more secure. Yvonne says, I'd love it. Dan and John both said good and great. Gary's like, bring it. Rich would be so good. I would feel dreamy, says somebody on the mobile device. Seymour says, I'd be in heaven. Yeah, and a lot of people saying great and good. And it's all about hitting those singles, getting a little bit of extra income to help you do the things that you want to do in a low risk type of a way. All right? Well, those are bullish trades, right? Right? Those are bullish trades. And Joe Ellen was asking, how long do you typically hold the trade? Typically until the either profit target is hit or you need to mitigate losses or close out of the trade. I'll just say this, Joe Ellen. Typically these trades last between 7 to 11 days is what we've seen on average. All right, so let's look at it on the other side, because you could do these trades both when the market's going up and when the market's going down. And even when the market's going sideways. Because remember, you don't have to be right on direction. All right, so again, let's just flip this around. And I'm going to go through this a little bit faster because I'm going to do it the same way. Bear, call, credit, spread. So it's bear, which means you're bearish on the trade. Downtrending market, downtrending stock. Call only uses calls. So we're just like with the one with the puts. We're gonna sell one and we're gonna buy one. Third, credit, you get paid up front, and spread is the difference between the strikes. All right. By the way, I'm seeing a lot of great questions coming in here, and we will have a Q&A period at the end because I want to make sure we kind of keep a good flow, but you got some great questions. I'm going to try my best to mix in your questions is what I'm saying here. But first, let's do our example here. So again, I like to do conceptually. Let me get my pen back out. So when you are bearish, you ideally would be looking for a bad stock with bad fundamentals already showing a downtrend. So this thing better be going down. Right? This stock better be going down. Even if it was in an uptrend before, it better be going down now. All right? This stock ideally would have poor fundamentals, going down, downtrending stock, and a downtrending market. So what we're going to do, again, based on probability, because Minethan says, how close or away do you do this compared to the underlying price? Well, it's based on probability. And as I was saying before, most brokers should have a probability number. And we're looking for probability to be, let's say I'm going to choose a strike like right here. That's where we're going to sell our option spread. This area up here, it's only going to have a 40% chance of getting to, or less. So it could be 30 or less. Okay? So when you look at your broker, we're going to pick a strike that has a probability that is 40% or less, right? So a very low probability, which means we should win 60% or more of the time. 60, 70, 80. We've been typically between the 70 to the 90% range, okay? So again, let's kind of do the conceptualizing this first. So I'm going to split this. So that's so that you understand the probability side. So again, we're picking the price, and I'm going to draw another line over here. Just pretend like it's the same line over here. And that's the call that you sell. And again, remember that's $2 signs. And this is the one we sell. You do not want to just sell a naked call. All right, so we're going to have a call up here that we buy as insurance. And that's going to be we're just going to use some of that money. These two cancel out, leaving us with a net credit. Again, don't ever worry that you're going to be accidentally placing naked calls, because you're going to set this trade up where both of them are attached to one order and your broker handles both of them at the same time. You don't place these things individually. You do both of them, the trades on one ticket, send it to your broker, and your broker handles the back end of doing them both at the same time. Okay? All right, so again, that leaves us with a net credit. So let's move forward. Let's now just skip right to the example. All right, so here's Facebook. Now, in this example, this was Facebook while it was still going down. After this here, I think it continued to move lower, and then it started to go back up. So it's kind of now just kind of lingering if you were to look at it today. But this is an example of a stock that you would find, and this stock was going up. If the stock was going up, it gapped down, and now it's hitting lower highs, lower lows. That is the definition of downtrend, right? Definition of downtrend. So at this point, the market and the stock were in a downtrend. So what you're going to do is determine where Facebook is not likely to go. And we use things called, like I said, probability. And again, that's just something that your broker calculates based on historic probability to answer a question I saw in the chat from Robert. So in this example, Facebook was at 157.25. The market is bearish. The stock is bearish. Bearish. Where is Facebook not likely to go? Well, so again, you could just eyeball this sometimes, and you might say, well, here's an area of resistance. You might say, ideally, I'd like to have something that is around that area or higher. Okay? Well, based on probability, we couldn't go that high. Right? We couldn't go that high. As high as we could go was 165 based on probability. Now, of course, we could have gone to 170 or 175, but there's a little give and take there. All right, there's a little give and take. If you were to go up to here, like this one, we receive $4.55 per contract. If you were to choose one that's even, here at 170 or 175, you're not going to get paid as much, which then increases your risk. Yes, it'll increase the probability that it'll win for you, but you're not going to be receiving as much income, and your risk, if it goes against you, is a little bit higher. So there's a little bit of play there. So based on probability, this was the best combination of low risk and nice credit. Okay, so we received $4.55 for that one, but we need our insurance leg. So we want to buy a call a little bit above it just in case the trade goes against us. All right, so we have this insurance up at 170, and that one would cost, it would cost us $3.10. So we received $4.55 here. We paid $3.10 here. Okay, somebody asked earlier, what if the trade shoots, goes up $20 a share overnight? I would say that is a super outlier. But you're never going to be, if that happens, you're not going to be incurring max loss. Right? You will incur a loss if that happens. But remember, that's why we have our insurance here. That rarely happens, but if it does, you would just close the trade at a loss and move on to the next trade. Okay, so what happens here? Remember, this is all done as one trade, and you just generated $145 per contract. Max risk is $3.55 because it was a $5 spread. $5 spread, we're controlling 100 shares per contract. So $5 times 100 is $500. But we received $145. So 500 minus the 145 means the most we could lose is $3.55. Okay? Again, you could do more contracts. If you did 10, that'd just put in a zero at the end. $1,450 or $3,550 of max risk. All right, so let's, again, look at a case study here. In this example, Facebook did exactly what we thought it was going to do. The market was going down, the stock was going down. Facebook dropped 7%. That's exactly what you want. Well, you made 20% in 2.5 weeks on the spread. So the money that you're risking, you made 20% versus a stock that dropped 7%. So because some of you out there like to short the market. Well, if you shorted Facebook, there's a lot more risk there. A lot more risk when you just short stocks. If you just shorted Facebook, you would have made 7%. However, on the spread, that's a 20% on the amount that you're risking. Okay? All right, so let me ask you this. Because I'm going to start to get into some case studies where I'm going to get some more feedback from you. If you had an income source, even in down markets, that's the key of what I just showed you. That's the same type of a trade used in down markets. If you had an income source, even when the market's going down or sideways, how would that impact you? So in the chat box, let me know. How would it impact you? Gary's like, I'd be smiling a lot more. John says it'd be sweet. Dwight, I'd feel more secure. Dan, super. Rich is like, I'd feel moderately good. John's like, I'm looking for this. Mark, I think that this is kind of a great summary, Mark. Mark just says, I'd have a way to generate income at all times. And that's kind of the key, because when the market's going down or sideways, it's kind of frustrating, just kind of watching your portfolio just kind of churn and spin its wheels. You want a way to be making money no matter what's going on. So let's look at some examples of a trade that we did. This one happened to have been on the SPX. Again, all these examples are historical examples. They're not like super far away, but this one was on the SPX. We love trading on the SPX. It makes it super simple. For those of you who are watching this webinar who are brand new to this, the SPX is a great thing to go with because it's really simple. It's just one ticker. You don't have to spend a lot of time looking for stocks. It just gives you one ticker symbol to trade. So, yeah, it's actually one of the most popular credit spreads that we do. So you can see here, let's see, it was trading at what? Around 2280. You can see here at the, sorry, not 2280. It was trading around what? 2850. Okay. Where do you, if we were on this one, bullish, where do you, I'm going to get your feedback in the chat box. Where do you think it won't go? If it was trading at, if it was right around 2860, that's what this little marker over here. And if you are going to do a bullish trade and you had to pick based on your own thought on probability. Now, of course, you could always say 2400, it'll never get down here. But guess what? You're not going to get paid a lot. It's not going to be worth it to do the trade down here. So you got to be realistic. Are we thinking like 2800, 2780, 2770, 2750? So I'm seeing a lot of 2800s. I'm seeing 2750, 2765, 2750 from Doug. Yeah. So now you can see up here, Doug, another Doug. Doug said, on Monday I bought my first credit spread. In fact, bought is the wrong word. He actually sold his first credit spread. You remember selling to open. He did 10 contracts on the SPX. Now, he did 27.75. So if I'm going to put those lines here on the chart, 27.75, I roughly tried to put these lines where his spread would have been. So SPX was up here. And this is great. If you can do this, this would be great because you can see it's right down below an area of minor support. Okay, so it's below that. So he did 27.75 and 27.55. Okay, so of course, if SPX goes up, you make money. If it goes sideways, you make money. And you have all this room down here. What ended up happening? Well, what, 4 days later or so, the SPX rose 1%. A measly 1% it went up. You can see here, Doug in his same post said he closed it April 5th. Okay, so he did it on that Monday and it closed it on the 5th. That happened to be just 5 days later. And he said he had a gain of $1,012. Right, so $1,012 in 5 days in that trade when the market, when the SPX only went up 1%. All right, so that's why we love these types of trades. You get all this room, right, and you have a nice little income stream even if the market is really doing nothing. Okay, here's another example. This one happened to have been a bearish trade. Okay, and you could see down here in the Alibaba, it was in a downtrend, tried to go back up and then hit resistance and just came back down, broke down below an area of support. And so we're bearish on this thing. The stock was around 139. Okay. You can see Manoj, right? Manoj here says he sold a bear call spread on Alibaba. Okay. Now he did 150, 155. So what does that mean visually? Let's put that on there. Here's his, this is a bear call spread. He thinks the stock is going to go lower. The stock was here, and he had all this room up here. All right, so he sold, this bear call spread involves selling a call and buying a call, resulting, you see this $5 right here? If he did one contract, that would result in a $105 credit. If he did 10 contracts, it would have resulted in a credit of $1,050, and his profit target would be half that. Well, he gave us an update. A few days later, right? Actually, 2 days, the stock dropped. He said, I'm out with my 50% of max profits. So those of you in the chat box who are asking what kind of profit are you looking for, it's 50% of the credit. So he walked away with, guess what? 50% in those 2 days. So depending on the number of contracts. So let's say he did 10 contracts. That would be basically $500 in 2 days. Okay. I think I got just one or two more. This one is case study number 3. Sorry, I forgot to get you more involved on that last one. So this one again this one's OLED. All right. So OLED stock was going up, pulled back, going back up. So it resumed its uptrend. It's at 194. Okay, 194. In the chat box, let me know, what would you feel comfortable as far as based on your own gut feel on probability on where you think it wouldn't go. Again, you don't pick a price down at 120 because you're not going to get any money for that. Nobody's trading those options down here, really. Yvonne, 175. Jill's 170 to 160. 180, 170, says Craig. All right, so I'm seeing a lot in the range of 170 to 185. Well, we got this right here. The bull put spread was 180, 170. So 180 is right here, which again, right below this pivot, which is fine, kind of right near an area of support. So this one, you can see Frank typed in that he was in this OLED trade, 180, 170. He closed it for 50% profits. Now, those of you who are saying about earnings, he said earnings are next week, right? So we close out of trades prior to earnings. We don't initiate trades that have earnings coming up in the next couple weeks. Those of you who are worried about earnings. So we avoid that. And we close trades prior to earnings. We never hold these through earnings. Okay? So with Frank, what was that? How many days was that? 13 days. Okay. The stock went up. That was exactly what you wanted it to do. It went up. He made $1,465 in 13 days. Okay. So just answering some quick questions. Ron asked, how far out are we selling? There's a window that we want expirations within the 21 to 45 day window. And Koikara or Kara wanted to know, what do we mean by closing? Well, yeah, it's the reverse. Your broker would just let you close the trade. So if you're going to sell it to open, and then you're basically buying it back to close. All right. A lot of brokers just let you right click on and choose close, and then you can set to close it. Now, if I could zoom in on this, it looks like sorry for this blurry image here. This, I believe, says 10 contracts right here. So he did about 10 contracts. Okay. If you remember a moment ago, I was mentioning how these types are pretty consistent. We're talking between 70 to 90% winning trades. The simplest system that we've got, which trades just like the S&P, and we do one trade per week, well, as long as the prior one had closed. Trading just the SPX has averaged between 70 and 90%. It's been about 80 to 85%. It's been as high as about 87. You can see here, 87%, nearing the 90% range. So there's a range in there. What we've found is the average winner is 7% gain. Now there are losers. Don't get me wrong. I'm not just showing you all winners, but there are going to be losers. But on average, when you follow the rules, you're out at 14% loss. All right. Well, let's just do some quick math. Let's just say you were at the top end of 10 trades a month with a 90% win rate, which is, yes, it's on the top end. So if you had 9 winners and you're averaging $700, let's just say that's 7%. $700 per winner, that's $6,300, right? One loser is bigger than the winner, right? It's $1,400. So it swallows up 2 of your winners. You're still net positive, $4,900 for that month. All right, even if that spans 2 months. Let's forget that it says 10 trades per month. Let's just say it's 10 over 10 trades. Well, what if you did an 80% clip, which is actually a little bit lower than what it's averaging, but let's just say you're an 80% winner and you get $700 per winner, that's $5,600 over 10 trades, $1,400 losers, that's $2,800 on your losses. You're still net positive $2,800. So if you were to go forward every 10 trades having an 80% system, and you're like, oh, cool, every 10 trades locking in $2,800 of income. Again, let me ask you a question. What would an income system like that do to you that is just net positive? Just following the rules, just net positive over time. Even if it's not $2,800, what if it was $1,400? What if it was $800? All right, what if you're just net positive over 10 trades? What would an income system like that allow you to do? Rich is like, I'm just going to say basically travel. Rich is like, I'd be able to go to Paris or Rome. Dwight says the same thing, more travel. Dan, he's just like, anything helps. For me, yeah, for me, Dan, I got kids who are about to be going into college. I just like to go out to dinner with the family. Yeah, Arch is like, enough for a wine bill. Just that little bit extra to help. I just had to have my whole air conditioning replaced in the house, heating and air. Bills come up, and it's nice to have ways to generate a little bit of extra cash for those times. All right? So I promised you that I would give you a checklist, right? To successfully place credit spreads, you need to follow a system. Right? You need to follow a system, and what we've done is, we put together a checklist to help you. So the first part of your checklist, and I don't have a PDF or anything, so you're going to have to write these down as quickly as you can. First off is always going to be market direction. No matter what is market direction. Okay, you're going to have a signal that tells you whether the market is in an uptrend or a downtrend. Here at VectorVest, we do like a signal like the DEW. It is the base of our paycheck system. We have an options paycheck system that we use. It is the base of that, but you need to have a system that says, hey, this market is in an uptrend or a downtrend. Not just up for the day, but in a trend. Second, you need to select a stock. So you're going to start with the same types of basic stock selection that here at VectorVest we teach. If you're bullish, look for good rising stocks. Smooth, steady, rising in price with good fundamentals. Start with that. If you're bearish, find stocks that are bad, that are falling. We talked about that earlier. Third, now it comes to setting up the trade. Pardon me. One of the main questions that you're going to ask yourself is just say, where is the stock not likely to go? Okay, where is it not likely to go? You could start by asking yourself that and then check the probability with your broker and see if that strike has a probability less than 40. And it's something like that. Give yourself, you want to be better than a 50% chance of being correct. All right? And yes, if we had more time, like some people are asking about some other things, yeah, we do want liquidity. Yes, that's when we're setting up the trade. We are looking for liquid options. We do want open interest over 100, things like that. We will not trade illiquid options. So you do want to have liquid options. And then we're going to plan out the trade. All right, you want to plan out the trade. You're going to take profits at 50% of the credit that you received. But also know that you may want to adjust the trade if it actually does go against you. Right? And here's one. We don't have time to get into adjustment strategies today, but just know that if it hits that short strike, you're going to want to exit the trade. Just exit the trade at that short strike and move on. And then once you do that, just enter the trade with the broker. And you then just manage it according to your rules. Okay? And just kind of rinse and repeat. So at this point, so you've got this checklist. You got these 5 things in here. Circle the ones that you're not comfortable with right now. And that'll give you an idea of where you need to focus your attention. Okay? So usually what I ask people to do is take their pen out and, let me just get something you could see, and put a star next to the things that you're really good at. Like if you have a great way of determining market direction, like star that. And if it's something that you're not kind of comfortable with, maybe like setting up the trade or planning the trade, maybe circle it or something like that. Okay? 5 seconds. Stars, circles, frowns, whatever. Based on that checklist, out of those 5 things, what did you learn about your option income system? What did you just learn? How many stars do you have, or how many circles? How about this? Out of those 5 things, where do you need the most help right now? Yeah, finding the trade. Some people are saying setting up the trade, finding the proper stock, I see, says Yvonne. Setting up the trade, says Seymour. The plan, taking the profit. Yeah. So, what are your action steps? Your action steps to help you, to help begin to unlock that option income stream for yourself Well, remember way back at the start, I said we had about an hour today. And I said, all right, what I'm going to do is give you as much info as I can about these trades. Right, explain them, and you can give me feedback in the chat based on, do you have a better understanding of credit spreads? And I promised at the end I would tell you where to go to get more help from us if you wanted to get maybe faster results. Okay, so if it's okay, I do like to show you that right now. All right, so a lot of you have heard of this course, right? It is the absolute best thing to teach these types of trades, right? If you want to get results fast, the options paycheck course is the way to go, right? Hands down, best course to help you install an income system. In a matter of like 7 weeks, you will have that complete system laid out in your hands. You will know how to do it from A to Z. That way you could trade that system with confidence. Okay? Now, I can confidently say that because, we've been teaching this for over 2019, 3.5, going on 4 years now. And we constantly get, reviews like this, that Jan had said, I'm particularly impressed with the options paycheck course. I've profited significantly even during training. I've been trading only the SPX credit spreads this year because I don't have the time or inclination to sit in front of my computer all day. Ron Wheeler was fantastic. By the way, Ron Wheeler is the main coach during this course. He's our options income coach. And Jan went on to say, it helped me generate over $60,000 of profit that year, right? Doing the options paycheck way. Says it's the easiest and simplest money generating project I've ever come across with so small a risk. Okay. We got here Elmer, after he had just finished the course, he posted this on that private Facebook group. He said, I'm a happy camper. 5 options trades closed so far that month, all winners for a little over twice what he paid for the course. 4 trades still open about a week later. He gave an update. You see there on the right. He said his bull put on Amazon that he had entered just the day before hit its profit target and closed while he was out shopping, which is kind of cool. So all that was taught to him in the course, right? How to find the trades, how to adjust them, how to enter them with the broker so that, if it hits the profit target while he's away, shopping, the trade will close automatically. The easiest way to explain it is to just map it out for you. So those, if you're interested in this course, let me just quickly run through it for you. All right, because it is like our top end course. The first thing we do in module number 1 is we cover all the building blocks that you might need to know in order to build a successful trade. All right, because a lot of people, they try to build they jump into options. They just start trading options with a weak foundation of knowledge. That's not the way to go. So what we do is we build a strong foundation. The outcome you get from module 1 is you're going to know exactly how calls and puts work so you can confidently use them in your trades. We'll say, hey, these are the terms to pay attention to. These are the ones you should ignore. That way you're not getting frustrated and wasting time. Module 2 this is where we really get into the credit spread, teaching you more in depth about that specific trade. So today's session was a great beginning to get you up to speed on module 2. But we go into more detail about the rules and techniques in module 2 of this course. Okay? Then guess what? Module 3, we then take those credit spreads and we sandwich them together and teach you the most powerful neutral market income trade called an iron condor, which can help you double your income without increasing your risk. Right? That way you can make money when the market's going sideways. Then module 4, that's going to teach you the roadmap, how to select your trades. Right? Today I could only get into some details about, pick good fundamentals, rising stocks, things like that. This module 4 will go in detail exactly what to look for on the chart. If you're using VectorVest, we'll point out some searches to run. It'll show you exactly how to find the stocks. All right? Then module 5, if you're worried about how to set up the trade, things like liquidity, volatility, open interest, strikes, deltas, expirations, this is all laid out for you in module 5, exactly what goes into setting up a trade to get that 85% success rate probability right from the very beginning. Okay? Then module 6 is our management. Because a lot of people feel like when they enter a trade, they're like a deer in the headlights when it starts to go against them. Not after you take Module 6. Module 6 will give you every single rule you need, and there's a handful of them, but they're really simple to implement. So that way, when you enter a trade, you are confident, you know exactly what you will do, whether that trade goes for you or against you. And whether you're a beginner or experienced, it's really key to know how to place the trade with a broker. So that's where Module 7 comes in. We're going to show you what trades look like with a broker. We'll show you examples. We'll show you how to enter it, when to enter it, how to take profits, all that. That way you can go, it's that complete A to Z system from beginning to end. So by the time we're done, you will have a straight line system to generate safe, consistent income. All right, month after month. Now, just this course alone, we value this course, right? $19.90. That's the value of the course, and we feel it's worth every penny of it. We're not going to charge you that for this course today as a special, okay? But you saw from some of the quote-unquote paychecks that people were receiving from placing trades, it's well worth the $19.90. You're going to get a few bonuses for signing up today. You get 7 live mastery sessions. So not only is the course taught live over 7 weeks, and you get all of the recordings. So even if you can't make a live session, you get all the benefits. In addition, we're going to meet a second time every week. So basically 2 live sessions every week dedicated just to paycheck content. So 7 live mastery support sessions there to help you implement what you're learning. Okay, so what we're going to do is we're going to get together. And again, Ron Wheeler, he's got 20 plus years of experience doing this. He's the main income coach. What he's going to do is he's going to take a look at the things you're doing and the questions that you have. He's going to guide you through it. You can submit questions ahead of time. So if you can't make it, submit your questions. We'll either answer you directly via email or via Facebook. We have a private Facebook group set up for you. And then you could always just watch the recording of the session. And of course, speaking of that Facebook group, we've already got a bunch of people in, pardon me, and once you're in this private Facebook group, you'll be able to interact with fellow students. But the other cool thing about this is not only are you in this group for the next 7 weeks, at the end of the course, you're going to be in an alumni group, which has got thousands of people in it, probably a couple thousand people in there who are in that group. And what Ron does is every month he goes in there for a Facebook Live and he does a Q&A. So even after the course ends, you've got a monthly Q&A with the instructor where you can fine-tune your learning. It's a great bonus. Okay? In addition, this is probably the biggest bonus, which is you're going to also be pre-registered into our top-end, high-tier Ultimate Retirement Coaching Group. So that meets 5 times throughout the week, where I'm just going to give you one key highlight. You're going to see in real time how Ron finds his trades, selects them, sets them up for trading. So every week, it's like giving trade recommendations every week. Okay? In addition, at the end of the week, he looks at existing trades that he's got going on and says, all right, this is what we need to do with this trade. Either it's hit profits or you're going to need to adjust it. Okay. You also get 7 weeks of access to the software that we use here at VectorVest. So if you don't currently have these tools, namely VectorVest 7 and Options Pro, if you don't currently have those tools, we want to make sure that you have access to them during the course. Okay. So we were part of your system. It's great to have a tool that increases the speed at which you do things. Okay. You can use your broker. Right, there's things like probability in with your broker. We do like to use VectorVest and Options Pro combined to get the work done a little faster. So if you don't have either one of those, we're going to give you access to the one that you don't have, or both if you don't have both, throughout the course. Okay, and then when the course ends, if you want to continue with it, you can. If you don't, that's fine. You could just use your broker. All right, so we're going to give you access to these tools during the course. Okay, so as a quick recap, you're going to get the course, mastery sessions, all these bonuses, right? Total value over $5,500. Now, I mentioned we're not going to charge $5,500 or $1,900 We have an early bird rate, and then we've got a rate for you special for signing up on the webinar. So the early bird rate is $9.95, which, by the way, is also our elite rate. However, if you order while you're on the webinar with us, if you're like, you know what, this is right for me, instead of the $9.95, it'll be $8.95. So my buddy Todd, if you don't mind, can you type that into the chat box for everybody? You know, www.optionspaycheck.com. We'll put that link into the chat box. After today's webinar, it'll go back up to $9.95. So the $8.95 is lower than the elite rate, lower than the early bird rate. It is a webinar special only. So you get the full course, the 1 year of access to the course, the 7 live mastery sessions, the access to the software, access to the Facebook group, to the members group coaching, all for the $8.95. Okay, just go to optionspaycheck.com. And those of you who are worried, it is completely guaranteed. All right, so 100% money back guarantee. Okay, so you can take the whole course, go through the entire course. Go through the entire course, and if at the end you're like, you know what, I want my money back. All right, we'll give you all your money back. If you're not satisfied, we'll give you your money back. We require that you do the work, right? We do require that you do the work because we know if you do the work, you're going to get the results, right? And I always ask people I want you to ask yourself this. Like, if I don't do this, how much would it cost me not to do it? You say, all right, well, of course you can say, well, how much money would I lose doing this on my own by trial and error? That's one thing you could ask yourself. You can say, all right, well, how much potential profit am I missing out on? I see these other people doing credit spreads, generating income. Am I missing out on that? You can say, well, how much time and energy will I spend trying to figure this out? Whereas spending the next 7 weeks getting it all just knocked out. All right. Then just say, all right, well, if I do this and it works, how would life be different? All right. There's a saying, right? It's one of my favorite sayings, actually, is that the best time to plant an oak tree is 20 years ago. Because right now you could be sitting under it enjoying the shade. Well, the second best time to plant an oak tree is today. Right? So it's not too late to prepare yourself and begin to do this. All right. So again, order before the end of the webinar. You get an additional $100 off. I will say this. If you're on today's webinar and you've already taken this class, I recommend you call our team because we have a price that is a refresher rate, right? Which is like $4.95, by the way. So if you've taken this class in the past, this specific options paycheck course, and you want to take it again, we have a refresher rate. Just call our team. Let me walk you through how to place this order. So if you go to optionspaycheck.com, you'll see a page that looks like this. There's a big button at the top that says register now. Just click on it. We could do this together. You just click on register now. You'll see a page that looks like this. Just enter your information on the right-hand side. Right? Enter your information on the right-hand side. You do not need a discount code. You don't need a discount code. You should notice it says $8.95 in all by itself. Okay? So other things, I do like to share. I mean, people always say, does this work? Is it for real? Okay? I mean, we get comments all the time on that Facebook group. Matthew typed in here, he closed out of these trades, right, for about $250 profit each during that week. So that's what, 1, 2, 3, 4, 5, 6. That's 6 trades, $250 profit each. And he says, I've tried a few other services last year, but VectorVest and Options Pro is an awesomely powerful system and blows the other ones out of the water. It is such a relief to be able to confidently place trades knowing your risk and profit potential before even placing the order. Then we've got, Wahid. Says, well, the paycheck course was well worth it. I just calculated my profit so far, and they've paid for the course at least 6 times over. Tim says, I closed out of my Amazon bull put spread with a 50% win. 4 out of my 5 trades were winners. Have paid for my class 2 times over. So again, go to optionspaycheck.com. Get yourself registered now before registration closes. If you order before the end of today's session, you get that extra $100 off the early bird rate. It is even lower than our elite rate. So $895 to change your life. All right. After today's session, it'll go back up to $995. So don't wait. Registration for this course will close on October 30th, and then we won't open up registration until sometime early next year. So it would be like 3, maybe 4 months or so before the next course begins. Okay, so now is a great time to get yourself ready for next year. Okay, I'll say this. It's been an honor to do this with you. If you know this is right for you, and you have joined, and you're in the process of joining, in the chat box, type "I'm in." Just say "I'm in," and that'll give me an idea of how many. I can welcome you, of course. Give me an idea of how many people are excited as I am. I get excited. Ron, who's our main instructor, gets excited. John, who is also on the team. Jim. I mean, we feel this really changes people's lives. Okay, so if you're in, type "I'm in" into the chat box. Let us know. So, Connie, welcome aboard. Rich, welcome aboard. Luigi, welcome aboard. John, welcome aboard. We got a couple of Johns. Welcome to you. If I missed your name, I'm sorry. They were kind of going through a little bit fast. I'll come back to them in just a second. But please, if you are in between now and tomorrow, check your email. All right, check your email for a welcome email from us. All right, check your email for a welcome email. It'll have all the details, the link to the Facebook group. It'll have all the dates, all the times, everything you need. Print it out. Put it by your computer. Mark down the dates on your calendar. Put reminders up. Because if you do want to attend a live session, you'll have that handy. It'll have all the instructions that you need to access the course. Okay? Now, I saw a comment in there, somebody who registered on Friday. Was it Jeff? Maybe it was Jeff. I don't know. There was a person who had ordered on Friday. First off, welcome. I will double check with our team to make sure all those welcome emails are going out, but please check your spam and junk folder. A lot of times they sneak over there. Okay? Welcome, Okan. Great to have you on board. The most common question I see is about dates and times. Because a lot of people like to attend the live sessions if possible. I have a slide for that. Give me 1 second. Let me see if I can scoot over to it. These are, like I said, we have the live modules. These are the live courses. It begins November 1st. All the live sessions are taught 4:30 Eastern time. We've tried a whole bunch of different times. That happens to be the best time. It's right after the market closes. We get the best attendance. So those of you who are wondering why we do those at 4:30, we get the best attendance at 4:30. So first session is Friday, November 1st. After that, it'll be every Tuesday at 4:30 for the 7 sessions. Okay? If you can't make it to a live session, do not worry. You get a recording of that session that you can watch. You can even submit questions in advance via email or Facebook. Okay? Now, there's also a second live session every week. Okay? Yes, Connie, these are live sessions. Live sessions. Plus, you get the recordings of those sessions. Okay? All right, so those are live sessions. Then we meet later on in those weeks. Live mastery sessions. So we typically teach the modules on a Tuesday. We give you a couple days to digest it. And then we meet on Fridays to do a mastery session. Now, those are at noon. The reason we do those at noon is, well, one reason is we don't want to hold you too late on a Friday because some people like to get out for the weekend. But the other main reason is we like to have the market open, because as the course gets into later modules, we want to be able to find trades in real time. We want to be able to show you what a broker looks like and show you an option chain and how it works in real time. That way you feel comfortable moving forward doing it on your own. Okay? All right. So again, only $8.95 if you order now. I know it's an investment. I hate to say sometimes only $8.95. Hey, $8.95 is no chump change, right? It doesn't, you don't just like throw $895 out every day. It is an investment. It is an investment in your future. Whether you make the money back in 1 month, 2 months, 3 months, 6 months, it's an investment in an income stream for the rest of your life. All right? So what I'm going to do is I'm going to stick around, answer whatever questions you've got, right? And I'm going to kind of look back throughout the questions that have come in. All right. So let me take a look here. All right. So I see questions from like Chris, Donald, James, Seymour, Karen, John. So hang tight. Hey, I'm going to do my best to answer every question. We are live today. So hang tight. Todd's been doing a great job of typing in responses. Let me do my best at answering your questions. So first question that is asked is, do you have an elite member price? Well, as I was mentioning earlier, the $9.95 is the elite price. Okay. We wanted to give a special discount for you on today's webinar of $8.95 because you just dedicated the past hour and whatever to be here today. Okay. So the $8.95 is only a webinar special. It will go away when we're done. Then it'll go back to $9.95. In about 1 week, the price will go up to $1,495 for non-elite members. Okay? Elite members can stay at $9.95. Registration will close 2 days after that, which would be the 30th of October. Okay? So this $8.95, to answer Walter's question, the $8.95 will go away when we're done here. So I would say probably about 15 more minutes. Okay, Walter, about 15 more minutes is probably the time that we've got on today's session. If I had a little timer, I'd put it up for you. All right. Let me see if I can grab questions. Let me get my mouse back over here. There's I think I got my mouse. I got this red dot on the screen. Let me just get rid of that red dot. There we go. Okay. So Chris O. Actually, Chris with a K. Cool name, Chris. Chris says, if I sign up today, can I get my money back if I can't do the trades with my broker? I'd say, yeah, Chris, no harm in doing that, right? You don't have to wait, for something like that, Chris, we would just make an exception, right? But we would ask that you kind of, if you want to take advantage of this, just do it. And then you can check with your broker in the next couple days and do a little bit and find out if you can do them. And if you find you can't, just call our team back and we could take care of it. You don't, on something like that, we're not going to ask that you do all the work and go, 2 months down the road. You know what I mean, Chris? But if you want to take advantage of this discount, you could just do it now. Check with your broker. If you're going to do these trades with your broker, for most brokers, they will qualify it as a level 3 trade. Right? And Grant, if you take this course, you will have the knowledge to pass any test from your broker. Sometimes they'll just ask you a few questions to unlock level 3 access, right? Some brokers qualify it as level 2, but you just need to do credit spreads, right? Vertical spreads with your broker. Hopefully that helped you there, Chris. This is in US dollars, so $8.95 US. And Jeff, it was Jeff L was saying that you registered on Friday. You haven't gotten the welcome email. Todd said he's going to check for you. So thank you, Todd, for doing that. All right, so I see a question from Donald. Donald says, is the money back guarantee after the 7 weeks or after 1 year? It's after the 7-week course. So that way you've taken the course and you've gone through the material. By then you should have an idea of whether it works or not, or whether you're satisfied. Okay? So basically what we're trying to avoid, Donald, are people who just I know people don't just throw $895 out. We want people in the course who are serious, and that's kind of what we're looking for. Now, of course, if you find after the first couple of weeks and you've been going through the work and doing it, that you're like, you know what, I've done all the work. I'm 2-3 weeks in, and you're like, you know, it's really over my head, or it's not for me. Just, we would ask that you call our team. But the refund window is basically right at, you know, about a week after the course ends. Let's see. Seymour says, will we trade live using VectorVest, or is that just for demo training? Well, Seymour, you still need a broker. VectorVest is not a broker. So VectorVest is kind of the tool to help you find the trades, set them up, right? You would then go to your broker. Ron Wheeler, who teaches the course, happens to use Thinkorswim. Some people use Fidelity. Some people use E-Trade/Options House, Tastyworks. There's a lot of brokers out there that are acceptable. Ron happens to use Thinkorswim quite a bit in his coaching. But Seymour, we will show you those types of things. Actually placing the trades later on. But if you happen to attend, remember those bonuses I was telling you about? Ron does those bonus sessions for his Ultimate Retirement Coaching Group on Mondays at 2 o'clock. You'll be able to attend those, and we actually give you a recording of that 2 o'clock session, just that 2 o'clock session. You can actually see him placing these trades. They're a little bit out, you know, I don't want to say outside. If you attend it the first week of the course, it might be a little bit new to you, because you haven't learned the system yet. But yes, Seymour, towards the end of the course, we will be showing you how to find, set up, and place trades, and Ron will use a broker as an example. Jill says, thank you for this good presentation. Thank you for that feedback. I appreciate it. It's always good to get feedback in the chat. Karen says, how much capital do I need to make this work? Karen, really, we interviewed one of our clients a couple of months ago. His name is Bob. He was using a $5,000 account. He was the one that I think I mentioned during today's webinar. He brought his account from $5,000 to $8,000 in, you know, the 4 months after the course. All right, so you can start off with, you know, a few, broker minimum basically. 5,000 is probably on the bottom end. You know, I'd prefer that you actually have, you know, 5 to 10,000, but you can go higher than that, of course. John K says, do you have to have a PC? Because I have a Mac. VectorVest is a PC-based product, and Options Pro is a PC-based product. Now, of course, just to take the course and view the course, you would use GoToWebinar. You could watch the videos. And like I said, you can use your broker to do many of the things, right? It might take a little bit longer. That's why we say VectorVest is a great tool for speed. John, if you do have a Mac, our team figured out a way that people can use VectorVest through a Mac. You're not installing it directly on a Mac. I got to be careful because sometimes Mac users get cranky because I don't explain it well. I would say call our team and they can explain better how VectorVest can run kind of through a Mac, not installed on the Mac, but it's like through a separate site. So I'm going to butcher that. I would just say call our team and they could talk to you about it. Christoph says, I registered last week after, watching, Ron teach his webinar. I got a little bit more information basically in today's webinar. So Christoph, awesome. Welcome aboard. I'm glad to kind of today filled in some more blanks for you. All right. By the way, if you are in and I forgot and I missed your name in the chat box, just type in I'm in. Like Chris, I'm glad we kind of figured out that thing about the broker thing. Chris says, okay, I'm in. Thank you. So welcome aboard. Great to have you. Christoph. Now this is a different Chris. This is Christoph. Christoph says 4:30 is perfect. It's around 10:30 my time in Belgium. Awesome. Walter says, when are the live mastery sessions? The mastery sessions are I've got a slide for that, noon Eastern time, because we want the market to be open. So that way we could show you how, basically in real time, what options look like and how to find them. And don't worry, if you can't make it, we'll send you a recording. You can submit questions in advance, and then we'll either answer you directly, or if we answer it during the session, you can then just watch the recording and see when we answer your question. Tucker says, how do you guard against big market swings like we had in August 2019? Well, that's kind of how the trades are set up. I'm not saying like every trade is going to go for you and that there won't be losses. There are going to be black swan events, every once in a while. But overall, if you stick to it, the system works over time. But how do we guard against it? Well, you can't guard against the swings from happening. But when you set up the trade, the way that Ron will teach you in Module 6 how to set up the trade is you're going to go into the trades. We've been focusing more on like the 2-to-1, 3-to-1. And when I say 3-to-1, that's risk to reward. So that way, if it is a loser, the losses are minimized. Right? So how do we prevent? I'd say it all goes into trade setup, going into the trade with the right setup to mitigate losses on the trade. All right. Rich says, at what point do we need to have an open brokerage account? Well, technically, as soon as you're ready to trade. But I'll say this, a lot of brokers will actually let you do a paper trading account, right? But you can just follow along throughout the course. Now, by the time we get to, the only time we're going to jump into the broker would be Module 7. So that's like, we start November 1st. We're 7 weeks after that would be Module 7. So you've got time before you need to actually get in there with a broker. So you got plenty of time. Luigi says, I'm living in the Dominican Republic. Is this a problem? No, we don't discriminate against people in the Dominican Republic. No, I don't, whatever if there's a time change, I'm not sure. Most of the trading you'll do are on U.S. stocks, as long as you're able to trade U.S. stocks. Now, people who are in Canada or Australia or Europe, they say, well, can you do this in my home country? I mean, the techniques we teach can be done in other markets that trade options, but in all reality, people who trade options, who are serious about it, trade U.S. options. I'm not going to sugarcoat it and say, yeah, go out there and you can trade the Australian options market. It's not very liquid. Even the Canadian market, which is probably the second most liquid options market, most of the people in Canada trade U.S. options. John says, signed up, looking forward to it, with an exclamation point at the end. James says, what's the cost of Options Pro if used later on? Sometimes I do hate to bring that up, James, because if it's something you've never seen before, you don't even know what it does and the benefits. And if I throw out any price, you might be like, well, I don't really want to pay that. And it's true. Anytime somebody would say, hey, Brian, that'll cost X dollars, I'd be like, I don't want to pay that. But throughout the course, we're going to show you what it is. And I think it's a better discussion to have towards the end, James, because we're going to tell you, what it would cost to continue with VectorVest. What about just Options Pro? And there's going to be a special price at the end if you want to join and get the coaching, which includes the Options Pro and everything. It's a better discussion to have then. That way you can say at the end of the course, you know what? I liked it, but I don't need it. I'm not going to subscribe to it. Or you could say, you know what? I liked it. I think it's worth it. So it's a better discussion to have then. So that's why we hold that off until week 7. But just know, James, we're going to teach you an income system throughout the course, independent of Options Pro. I think Ron says it best. Ron Wheeler, he's the coach. He says, these techniques that we're teaching you in this course, he's been doing before Options Pro was even invented. Okay, so this course is not dependent on Options Pro, but, Options Pro was created to help you implement these techniques faster, but you could still do them with a broker. All right. Christoph says, okay, cool. Thanks. DJ, I think DL Jones, I think it says, I'm in with 1, 2, 3 exclamation points. Welcome aboard. Take care, Chris. Yes, Rich, you could do ETFs. Yep. In fact, yes, you could do ETFs. The SPY is probably the most popular ETF. It's cheaper than the SPX. It's just like 1/10 of the SPX. But I mean, you would need more contracts of the SPY. James says, what does the Options Pro do for you in options trading? It speeds things up. I like Options Pro because it helps me analyze trades too, kind of set them up and visually see them. And it's just the speed at finding the trades. Like, because VectorVest will help you find a list of good stocks, and then you can just send them over to Options Pro within a few clicks. It's now narrowed that list down to a handful of ones that you can filter it by expiration. Expiration. Yeah, you can put probability in there. You can filter out the companies that have earnings coming up, all in just a couple of clicks. You could do all those things with your broker, but they might not have all those same tools and let you do it as fast. All right, Mike, welcome aboard. William says, how many strategies do you teach in the course? Well, we teach the 2 credit spreads, the bull put and the bear call, and we combine them into an iron condor. All right, I'm going to give you one last chance to type in a question. If you've got a question, let me know. Otherwise, we're going to wrap things up for the day. Jeff says, I'm ready to go. I called support. William Land in the product support team was great and says, I'm looking forward to the refresher course. Awesome, Jeff. Jeff, you said you didn't get the welcome, so I'm glad you got it. Oh, okay. So that might be the delay. The refresh, that might have caused the delay. Okay, I see what you're talking about. Because if you entered those on Friday, we probably didn't enter them until this morning officially, and then our system would send out the official welcome probably tomorrow. But I'm glad William got that all figured out for you. All right, last chance. Last chance for a question. All right, so I should have had this slide up for you to help you see what's going on. It's $8.95 for the next 30 seconds. That price will go away here in the next few seconds, back to $9.95. Still an awesome price for this course. As you saw, people make that back. I won't guarantee the amount of time, but can make it back within a couple of trades. Okay? Optionspaycheck.com. Registration closes in 9 days, basically next Wednesday. Price will go up. Well, after it goes up from $8.95 to $9.95, it'll go up to $14.95 next Monday. All right, so have a great rest of your day, and we really look forward to seeing you in the course. All right, take care, everybody. We'll see you in the course. Bye, everybody.